2013 was a good year for Korea. Growth rebounded to 2.8%, and Korea emerged as a safe haven in the global market turmoil of last summer, unlike on previous occasions. We expect 2014 to be even better, with growth strengthening to 3.7%. Of course, there are risks, particularly if growth in the main trading partners, China, the US, and Europe, disappoints. In that case, there would be room for fiscal policy to be more supportive. Beyond the near term, there are challenges, notably aging and rebalancing. To continue lifting up living standards, widespread structural reforms will be needed.
Addressing these challenges will need reforms across a number of areas, including the fiscal framework, labor market, and the services sector. These will be mutually reinforcing and will enhance stability and inclusiveness. Household incomes in Korea have grown more slowly than real GDP since 2005, as a larger share of national income goes to the corporate sector, with export-oriented firms taking the lion's share and lower-income households being hit the hardest. This has weighed on consumption and led to a large household debt overhang, which is now a drag on overall economic growth.
Fiscal policy can help. Even after adjusting for Korea's younger population and lower income level, its social spending is lower than OECD peers by around 6% of GDP. Moreover, Korea has scope to broaden the tax base and target transfers better to meet distributional aims.
Korea's per capita income rose from around 11% of the United States level in 1970 to 65% by 2012. One of the most rapid and sustained convergences achieved, yielding impressive gains in living standards. But GDP growth has slowed down in recent years. Looking ahead, population aging will be a major further drag on potential growth. If this happens, the income per capita will cease to catch up to that of the United States. However, a comprehensive package of reforms could prevent potential growth from falling. Labor market reform is a key pillar. Boosting participation by women and the youth in the workforce, closer to the best performers among the OECD countries, could make up for more than half of the projected loss of growth potential. And efforts to reduce labor market duality should be stepped up, including by enhancing the access to training, opportunities, and improving social coverage for non-regular workers. Boosting service sector productivity will be another key pillar. This will require further deregulation of professional and network services, as well as consolidation of small and medium-sized enterprises to enhance their productivity.
In sum, Korea is very well positioned to recover fully from the crisis and deal with near-term risks. But to continue achieving high and more inclusive growth, it needs to tackle two longer-term challenges: rebalancing the engine of growth towards domestic demand and sustaining its growth potential in the face of rapid aging. This will require significantly higher social spending and a broader tax base, labor market reforms to boost participation in the workforce and the creation of good quality jobs, and finally, deregulation to raise productivity in the services sector. What is encouraging is that the authorities are well aware of these priorities and they are acting on them.